Good morning, ladies and gentlemen, and welcome to the Coffee with Craig show. We'll be talking about commercial real estate in Central and Eastern Europe.
Good Tuesday morning and welcome to the Coffee with Craig show. And in the highlights from the EuropaProperty.com website for today. And Savills have conducted a recent survey involving real estate investors with EMA assets under management exceeding 500 billion euros. And European multifamily, big box logistics, urban logistics, CBD offices and student houses are the top 5 sectors that investors are looking to invest in over the next 12 months. When asked about their strategies going forward, over 55% of respondents indicated that they are now looking to follow a more defensive approach, focusing on the so-called beds and shed sectors, along with CBD offices in the most liquid markets in Europe. This is mainly because over 76% of respondents confirmed that refinancing will significantly impact their total returns over the next 2 years. And according to Chris Gillam, head of offices European Capital Markets, our survey confirms that certain real estate sectors will continue to see investor demand while others have currently fallen out of favour, particularly those with rental growth potential at the top of the list, linked to, for example, stronger indexation in the continental European office market. And John Palmer, head of industrial investment in Poland, added, the price expectation gap between buyers and sellers has significantly widened. Nevertheless, industrial investments in Poland have the benefit of strong fundamentals for future rental growth, which is an attractive ingredient for investors not readily found today in Western markets. Staying in Poland, and Catella, the Berlin-based residential investment management company, has sold 2 centrally located, fully let residential and student housing assets in Warsaw and Krakow to Austrian and Netherlands investors for more than 60 million euros. And Poland is an increasingly attractive market in the residential for rent and student housing sectors, with its 38 million inhabitants. It's the largest market in the CEE, and faces a shortage between 1.5 to 3 million rental apartments. And Poland's purpose-built student accommodation market is also very attractive for investors, as the country has some 1.2 million students living in institutional student dormitories and needing more of these assets. Clifford Chance acted as legal advisor on both sales. Staying in Poland and moving to Warsaw's office market, and according to JLL, Q3 2022 saw a record low developer activity. At the end of September, only 160,000 square metres of space was under construction. As a result, new supply is expected to drop significantly in 2023, with only 60,000 square metres of space coming to the market. In the last few months, nearly 100,000 square metres of space was delivered to Warsaw. Among the completed developments were HP Revis's flagship project, Warsaw Tower, which delivered 63,800 square metres, and the P190 office building from Skanska, which delivered 32,000 square metres. JLL expects that the year end will see the start of new investments, including the Drukianka campus of 42,000 square metres and the Form of 29,000 square metres. And according to Piotr Kaminski, head of office leasing at JLL, the past 2 years have been marked by a significant slowdown on the developer's part, which translate into a significant drop in new supply. In 2023, the capital will see only 60,000 square metres of new office space. This translates into a number of changes to the market. After nearly 3 years, the segment of Class A real estate in downtown Warsaw is changing from a tenant's market to a landlord's market. Moving to Hungary and staying in the office market, and British Telecom has signed a new agreement to relocate its operations in Debrecen to a state-of-the-art offices in Great Forest City Park Forest offices developed by GTC. Around 500 colleagues based in Hungary's second biggest city will move to the new location in 2023. The move to new office set to provide an outstanding employee experience. It is also a sign of BT's long-term commitment to Hungary and local talent. And according to Peter Giori, country host of BT in Hungary, he says, with this move, BT strengthens its position in Hungary as a strategic location for its critical services provided for customers. This announcement comes just months after the opening of our brand new office in Budapest 1. These investments further solidify our position as the employer of choice in Hungary, and we will provide a nice backdrop as we celebrate the 15th anniversary of our service centre here. And finally for today, and moving to Romania, and in the retail market, A new retail park with an area of over 8,500 square metres GLA is being built in Mosnita, Romania. Completion of the new retail facility is planned for the third quarter of 2023. And so far, the building has secured brands such as DM, Sportissimo, Teddy, Fresnap, Cleverfit, and over 50% of the new development has already been leased. And according to Wojciech Jurga, he's the managing partner at Scalia, responsible for Romania. Romania remains one of the most attractive markets for retail real estate investors. The growing purchasing power of Romanians, their growing requirements, and the lack of modern commercial real estate in medium and smaller Romanian cities are increasingly interesting for international and local tenants. And those are the highlights from the EuropaProperty.com website for today. For more news, please join me again tomorrow.
Click here to subscribe to the Coffee with Craig show, and don't forget to share it with your friends.